Joining me now is Charles FitzRoy, President and CEO at Giyani Metals. Good to see you again, sir.
You too, Mark. Really good to see you also.
Let's start with a snapshot, if we could, for those who may be unfamiliar with the story. The company is developing the Cahill Manganese project in Botswana. You're also constructing a processing facility. So can you give us a brief overview of what's going on there with the company?
Yeah, that's right. We have got a demonstration plant which is under construction in Johannesburg, where we'll be producing high purity battery grade manganese, so HPMSM, which is high purity manganese sulphate monohydrate, this quarter in Q4 this year for off-taker testing. And that is our facility, which will be a 1:10 scale of our commercial facility. And as you said, the commercial facility will be located in Botswana next to our manganese ore sources. We have just under 2,000 square kilometers of licenses in Botswana. We have 4 named projects, and our Cahill is one of those where we have resource on, have an indicated resource. And we actually have done some drilling recently to upgrade a portion of it to measured for our DFS, which is underway as well. And our DFS is due in 2025. So we're a TSXV listed company with all this going on. So as you can see, a lot of interest in the battery sector from manganese, where we're seeing a huge growth and demand in battery grade manganese for increased use in NMC style batteries and also potential for LMFP. So that's the addition of manganese to the LFP battery. But we can go into that more later, Mark.
Right. We'll circle back to a number of those points you mentioned, including the facility and the use of manganese in EV batteries. Now, a major catalyst for the company recently, Charles, as they were granted, or you were granted, a 16-year mining license. So what's the significance of that? And can you give us some flavor in terms of operating in Botswana and the support you get there in that jurisdiction?
Yeah, so we have initially our mine license, which initially is for 15 years. And then we get each year, so each time we renew it, we can get up to 25 years renewal, and we can renew it for multiple times. So we have a very long mining license potential in Botswana. That mining license was got through a process. So that it started off with getting our environmental authorization, which took 9 months from submittal. So again, that's a fantastically quick time frame for getting anything from an environmental authorization perspective. So fantastic in Botswana that we can have that level of support in country to be able to get it so quickly. And then we submitted our mining license at the very end of 2023 and received it in September. So again, another 9 months from submittal to receipt of our mining license, which shows how quick actually getting things done in Botswana is. It's fantastic support we have in country from a local level and also to a government level. And we also have recently submitted our special economic zone application, which will enable us to benefit from tax benefits within our plant, which is really where the main revenues come from Giyani, because Giyani is all about the processing technology we've developed around our ore. Our ore is a low impurity manganese oxide ore in Botswana, but the plant enables us to create a very low impurity leach from the ore and also making that into a high purity product. And the high purity product is the key thing, because that's what the battery manufacturers demand. And our low impurity ore enables us to make that high purity product. So that's key for us and really strong support in country.
Now, you mentioned the plan to produce the first product this quarter. That's for qualification and testing, and then a DFS in 2025. Can you elaborate on some of those details and run us through the timeline?
Yes, so we are very much on track with our demonstration plant, which is in Johannesburg. And that has the capacity to produce up to 600 kilos a day of battery grade manganese. This plant is a 1:10 scale of our commercial facility, which is planned for Botswana, and that will be ramping up from 2027. This facility will enable us to produce offtake product to test for off-takers and OEM groups who we look to get off-takes with. And the high purity nature of our product, our plant enables us to get to that level, which is a consistent product from both specification perspective and also quantity perspective, and that's vital for off-takers. And having our plant, which is a continuous facility, enables that. It's really think it's going to be one of the largest in the world of its kind. It really is a phenomenal facility, and we'll be putting out updates for the next few months until we get this up and running and commissioned and later this quarter. On the DFS as well, we have got a DFS underway for 2025, which is progressing well. And that will incorporate a lot of learnings from the plant, because the plant is a multifaceted facility. It enables us to test our process, optimize our process, train up our staff ahead of the commercial facility ramping up. And also the main key thing is obviously that product for off-takers, which enables us to get an off-take contract, which will be early stage part of the financing, project financing, which we'll enter into after the DFS is complete. So this facility is helping the project move forward dramatically.
Now, Charles, the company has said, Giyani Metals has said that when you look at manganese, it makes up about 17% of an EV battery, and that may surprise a lot of people that it's that high. And then it only makes up about 2% of the cost. So can you maybe provide us some more details on the importance of manganese in the EV battery supply chain?
Yeah, Mark, that is a fantastic point. So with manganese, it is quite a conservative cost profile for manganese. The Chinese price is under $1,000 a ton. We're seeing prices in the EU obviously much higher than that. We understand they're between 2 and 3 times that from sources in the EU. But that is a small cost compared to cobalt and nickel, which are the other main components of a very large proportion of batteries. Sort of around about 40%, 30%, 40% of EV batteries are NMC, which is nickel, manganese, cobalt batteries. And what has taken a large part of that is nickel NMC 811, which is 8 nickel, 1 cobalt, and 1 manganese. A lot of manufacturers are looking towards lowering that nickel content and raising the manganese content and lowering the cobalt content. So manganese fits into that very nicely because it is a lower cost than nickel and cobalt. It has a very strong carbon footprint compared to those two metals, which has a higher one. And also, it's not geographically located to one area. It is diverse. We have projects in South Africa, Botswana, Europe, America, West Africa, so Australia. So there's lots of projects around, which enables the benefit for non-FEOC sources, which is where the Inflation Reduction Act in the US is pushing the requirements for OEMs from their critical minerals to come from sources outside of FEOC countries, which are regarded as China, Iran, North Korea, and Russia. So manganese has many benefits, and that's why a lot of OEM groups are looking to increase its content in batteries and going towards those higher manganese content batteries. And that's where we see a huge demand coming. And this demand profile ramps up in manganese from 27, 28, which fits nicely where we're ramping up our project from that time period too. So very positive market outlook for manganese.
Let's pick up on that point that you made there, Charles, about original equipment manufacturers and off-takers and their requirements. You have a lot of experience dealing with them, and I know that you can't give away the farm in terms of too many details, but how are you approaching project financing with those groups?
Yeah, so the offtake is a vital component of the project financing. Once our product comes out of the demonstration plant later this year, we will send it off to OEM groups for testing, which generally is a 2-phase approach. And then once that process kicks off, we'll look to enter into some offtake agreements. And the DFS as well is the next phase. So the offtake, the DFS will enable us to go into project financing, which we'll look to get into towards the end of 2025.
And still with financing and funding, the company has received support from the IDC of South Africa, also Arch Sustainable Resources Fund. So what can you tell us about the importance of support from those groups?
Well, these two groups really have helped us push forward. They came in at a point and enabled us to have the funding available to complete the demonstration plant and also to kick off that DFS study. So IDC, which is Industrial Development Corporation of South Africa, came in for a convertible loan facility of $16 million. Then Arch Private Equity Fund came in for $10 million. The IDC, being a backer of us, is fantastic. They are a group which develop projects in Southern Africa. You have to deploy about $1 billion per year. So having them as a supportive group at this stage is really fantastic for us and very positive potentially for our project financing, where we hope they participate. And then Arch, again, it's great to have another strong partner involved with us along the way. So two partners from different areas of equity and debt. Fantastic backing from those two strategic elements.
All right, let's do a hypothetical here, Charles, if you could. Let's jump ahead to 2027. Production is ramping up for Giyani Metals. So what's the base case that investors should know about? And if everything goes exceedingly well, what's the upside case?
So we've done a PA in 2023, and I'll talk to those numbers now because the DFS is underway. DFS is obviously based off this PA, but building upon it. The PA had two scenarios, a base case, which is 80,000 tons per year of battery grade manganese, and an upside case of 160,000 tons per year. The base case was a NPV of $1 billion, and the upside case had a NPV of $1.5 billion. So you can see very positive economics. And we look to build on this in the DFS, where we are trying to optimize our flow sheet, reduce reagent costs, and reduce OPEX. So we look forward to the numbers that come out next year.
Lastly here, Charles, could you summarize your thoughts for investors as far as the investment case for Giyani Metals?
So Giyani's mission is to be a dominant Western producer of EV battery-grade manganese chemicals. We have a security of supply chain in Botswana for a non-Chinese product, a battery-grade manganese product. We're going into the rapid growth in demand for battery-grade manganese, which is seen from the increase in the usage of higher manganese content batteries from NMC, high manganese and low nickel, and also LMFP. It's a low carbon battery metal. It's very positive for many markets, and OEMs all trying to reduce their carbon footprint. From a fast track development perspective, Giyani is a very supportive jurisdiction. We've got our mining license in 9 months, our environmental authorization in 9 months. We secured our lands right this year. We've got a special economic zone application in. So all very positive for the company from a community stakeholder up to government-led stakeholder, very strong support. And again, a credible developer. We are related to Botswana, team in place has developed projects similar to this before. We've got very strong knowledge in-house, and Giyani has that proprietary processing technology it's developed for processing its own ore sources, where we have 2,000 square kilometers of licenses and leases in Botswana. We have our own ore sources, which will be used for the demonstration plant and the commercial facility. And alongside that, we have a lot of material catalysts over the next 18 months due. We've got a demonstration plant, going to be producing product end of this quarter, going into DFS, project financing, offtake agreements, and then the big numbers obviously going towards commercial production, ramping up in 2027. We have a strong backing. We brought in $26 million earlier this year from ARCT and IDC. So all this is very much making Giyani a very solid investment and a very interesting time to get involved in the company.
Well, Charles, thanks for laying out the case and illuminating some more for us on Giyani Metals. We'll see you down the road. We'll be following.
Thanks, Mark.
All right, Charles FitzRoy, President and CEO at Giyani Metals. Our thanks to him, and thanks for watching. We'll see you next time.